So good day everyone. We have this chart. It's the Bitcoin USD chart. And what we are going to do is going to analyze it on what we are seeing. So let's go to the daily candle so we can get more insight on the major points in this chart. So we can see first in is that we have a we call this place a low. So we would like to highlight that point. This low, I'll try to take it not from the week. I'll try to use the body of the candle. And also we have other kind of low here, which is an equal low. You can see they are equal. And we have some highs here, which are also in the same zone. And from looking at it deeply, we would see there is a need to put to make reference to this point too. This high here and this high here and this. So these are all we are going to do on the higher time frame. So we'll go to the 4 hour candle. So the 4 hour candlestick is a little bit more smaller and it gives us more in-depth view of the charts. You can see where we noted those points are there. And yeah, so when you look at the current market price, you can see that after this long pull up, we can see the market is already falling down and it has fallen back down to the same accumulation that happened here that brought it up. So this is the distribution and it came to this accumulation, which I deduced in my group that there was a Wyckoff schematics here. So the Wyckoff schematic is basically the swings that you would see that would give you some clue that this market is being driven by real people. So and like I've already done earlier before people start joining, I went to the daily candle and I noted the major points that are very interesting to me. This point here, this higher point here, this point and this point. So simple like that. And we go to the 4 hour candlestick, which is a little bit clearer and smaller. And we would see that this is where we are interested in this point, this zone. Because yeah, obviously, market has been falling down from this high, which is at 125. It has fallen down to as low as 989, which is huge fall. But we would love to, take account into all these points too. It's an old high. There is an equal high to here. I need to note this place. And then we have some highs here too. We can see they keep growing and then this high here. So in this zone, what do we have here? We have um we have this there's this line here. We have this bunch of equal highs here. I will need to put them a little bit up so we have the bunch of these equal highs here and this higher high. So we would see that this equal high were broken by this move that created a new equal high with this place. So I'm going to note that point. I'll note this point as an high or high, sorry, go H. And also you would see that I'll need to clone this one to clone. And we have an equal high here too. So control copy, control V. We would need to use here, but this is going to be low, going to be equal low. So the reason why I'm loading all these places because they are going to be my reference point where I'm going to be referencing the market prices. So now we have this equal high, equal high. This is also an equal high to here, but I don't really need to notice because we are dealing with this zone here. So when you look at the market came down here, comes down, drops swiftly. You can see because this move to this move. It took only like one, two, three, four, five, like five candles to pull it down, and it went back on up and also came down again. I want us to keep noticing those points. See, went back up again. Like imagine this two drop. It brought the prices of market down from this high. to this low, which has been taking, we can count the number of candles that happened there. One, two, three, four, five. It's a lot. And it took just two candles, two 4 hour candle, which is 8 hours to break it down back. So, oh, sorry. It is something that we have to remember. So while remembering that, we should not forget that I'm trying to like compare the strength of the buyers and sellers. You can see the sellers will drop it swiftly, the buyers will bring it back up also, and it gave us like what we call a range in the market structure. We call this place a range. So and a range is basically market that goes like this, like this, like this, like this, like this, and then finally a breakout or a fake breakout or a full breakout like this. So we are going to be looking at that now. I mean, we have to remember that too from our basics in forex trading, you know, all these trending market and range market. So this is the range market. Obviously, it has been ranging from this price 97,000 to 81,000. Although it has not been 81 in a recent time, but we can say it ranges to 84. So now, what is the market currently doing? Now we have this equal here. We have an equal here. We have this equal that has been broken and it has been sorry. And it has already went back inside this equal eye again, the range. So we see that it has rendered this equal eye useless, but no, there is a way market does its thing. It does not forget every point there. So if you look deeply, the reason why this place was rejected was not even maybe here. It might be some old references here. You can see this point like this. See? So it's some old references that made it to happen here. So now what I'm necessarily trying to say is that um market does not forget the prices, the history, price histories. So now that we know that, it means we need to pay attention to every point. So we can see there is an equal lows here too. Like although they are rather like a lot of this undecided candlestick which are called dojis, which they call dojis by the way, sorry. So we would see we have equal lows here, so equal dojis that are low and it's equal to this one, like the zone is a little bit equal, so we would keep noting that also. Now market rallied up, came down, went up again, then came down. So what does that mean? It means that the market is still a little bit indecisive on the point it wants to go. I mean, it is not showing a true intent because see this equal high, this range now, it broke this equal high and pointed up. And in turn, it made an equal high with this point here and rejected it and started coming down swiftly. Actually, I wanted to buy here because according to my Wyckoff schematics, although my Wyckoff schematics has been completed, I wanted to buy somewhere here. According to my Wyckoff schematics, I'm coming. Where is my Wyckoff? I think it's on is it on crypto.com? No, not on crypto. It's on Coinbase. Okay, yeah. No, it's not on Coinbase. On Bitstamp. Okay, yeah. From my Wyckoff schematics, you can see that. So it's this is basically what Wyckoff said. If you go online and search, oh sorry, and search Wyckoff schematics, it on my course, you can accumulation. Sorry. So you would see the images of what it entails. Yeah, this is it. You can see there's a lot of it on the internet. So when you bring this thing and compare it with what we have here, you would see they are very similar. It has a primary support, a secondary contact, and then a rally, a secondary test, a secondary test also, which is going to be in phase B, and then we have a spring. Spring has to exist in phase C. So you see our spring here is in phase C. This is where I found my spring. So, but the spring has to be validated. That was why I said spring validity lies in going below a secondary test. So there is a spring here, but it's not yet validated. It has to go below this secondary test at this point, at this point here. You can see it's producing and then it started going up. Now, so what I necessarily want to say is that our Wyckoff schematics has been completed. Although Wyckoff schematics are more characterized with a rally up, but that is not the end. It can fall back into the zone, into the this zone. So that is what we are currently approaching That's what we are currently attending to from this chart here. You could see these are my equal high that I noted, and then this equal low to these these chunky lows. I noted it in the other chart, and then we have this equal low here, this little equal low here. So what does it mean? It's earlier before I wanted the market to trade into this FVG, which is the fair value gap, which means like the distance between the last black candle or the last opposite candle in a move that broke a market structure. So this is the market structure, which is equal high. And this is the last black candle, which is the opposite candle in this green move that broke this structure. So that is the fair value gap. And I mean, the distance of those two candles is the fair value, and it often used to produce an order block, which is this case is a bullish order block, which means when market comes back there, we expect a reaction of buy, and that is why we see here. I bought on the group, although I was hoping to buy up then, but I went it stop loss, which is unfortunate. But yeah, we would see that this zone here, it has to a little bit to the full to the height of the candlestick here of the last black candlestick, which is the other block. So this is what we call the other block, this black candlestick. It was the last black candlestick that was produced before this structure was broken. And the distance between those two the next black candlestick is what we call the fair value gap. So we would see that the fair value gap was valid in that it attracted the market back. So a fair value gap is just basically when when market goes like this, it cannot just keep going up like that. There is a space here, this point, this point to this point, like nothing has happened here, the opposite side. It has only been buying. What about people that sold here? How will they buy? I mean, because basically forex is just buying and selling in that when you buy, it means there is someone that is available to sell for you. So now when we now see a market that is just climbing or buying, who are those people selling to them? It has to come back down. It might be in like 10 years before it feeds this value gap. So that's what a value gap is. So we can see it happened here in our chart that this fair value gap here. That was why I said on the group like would wait for the market to trade into this FEG. So the market traded here, and when it traded here, it went to the order block directly. And if you are going to be a scalper, I mean, you like to enter in the market and get out of it. Your buy it's coming down. Your buy stop would be here, and it means when it gets here, it buys and rallies up. But unfortunately for us, it only bought for like this candlestick, second, third, fourth, like fourth candlestick, and you know perfect money management and greed would have allowed you to make some cool cash from that. Because obviously speaking, seriously speaking, I knew the market was not going to really rally back up. Like, I mean, it wouldn't start going up. I see some gaps here that it needs to feed. For example, the sellers here, I mean, who is going to feed them? It might feed them now or later. So now it has even shown something to me again now. I'll try to I like that. So now, see this point now. You can see there's a fair value gap here, this one. The market has not, when you look at this other markets, okay, this other market, like this one went up, it was cancelled by this. This one that came down was cancelled by this. This one that came down was cancelled. So that's like it goes that way and so on and so forth. So now, what's it? So now you would see that market like I said, it remembers the history, it remembers where it's coming from. So that is going to be our sentiment. I mean, like we are going to pay attention to the most side that has most market structure. I mean, like market interest. So for example, we have this high here, we have this I know I noticed this is an order block here, and then we have this equal high here, we have this equal low here which has been broken but has never been retested. We have this fair value gap which has been tested, and this other block which has been broken. And then you can see the market is keeps hunting for something down. Why? Because in sooner or later, I mean not even later, sooner, the market is going to try to reach for this back, this higher high here, this point. So it is trying to clear as much as possible whatever that it has created here. You can see the highs are getting higher. This high here, this low rather, lows are getting higher. Low, it is not a lower low anymore. It's a higher low, higher low, higher low, higher low, higher low. Like the lows are getting higher. So we expect the market, to trade where? To trade first into this. See, there is a fair value gap here. Like I said, the last um opposite candle in a move that broke the market structure. So this move broke this other block. So this is a fair value gap. So we are looking for market, to find a place and rally around and trade into this thing. So now we now need to know where to buy from. We can't just buy because obviously there is this fair value gap here, and then probably there are something. You see, there is this low here too, which we don't know market might want to eat. But looking at this hike in price, which is this huge hammer, this doji candle, this one here, can see that it went down for most of the hour, and then in the 9 minute the market price went back up. So it shows the strength of buyers not willing to bring the market price down. So just keep our hands tied and have a look at keep our hands tied and keep and have a look at how our market might turn out in favor of the buyers or sellers. So this time is just time of observation, whereby we observe the this thing, we observe the direction that it would head to. So thank you guys. This is just a simple life analysis on how I trade. Now I look at the structures, I look at the points and the interest of the market. Does the buyers, would they like the sellers to take the market down, or would they like it to be still be bought? So and also coupled with news where we can get on this application, you have to read the news to be able to understand your this thing. So my decision right now is just to observe and see how market reacts, when it gets back to the OB and maybe when it goes to here. So we can just, gamble around and we can say we want to buy, we can say we want to sell, but we need to pay great attention to where the market might eventually go. So thank you very much, guys. Okay, let me quickly take a look at XRP USDT. I love to trade cryptocurrencies a lot. Ethereum, it follows similar course as Bitcoin most times. You can see these higher highs and these equal highs, higher lows rather. So I think from this little explanation, you would be able to, understand what we're actually doing on this thing. We just don't write those things here. They are like points for us, and we we pay attention to them. So this equal low is very important, like I said. This equal low also, which has been broken. But I know, like, okay, let me even see H1 advancing. So now we can see this fair value gap. It's very this thing, but it has been retested a bit. So now, how do we know if it was really retested? Now, like I said, the fair value gap is the distance between this last green candle, which is the opposite candle, and this recent, the one that is there. So those are the fair value gap. So now, how do I confirm sometime? I use my personal Fibonacci. So if this market has retraced back to 0.50, I would know it has been retraced, but it didn't retrace back there. So it's a clue to me that markets would still want to go back there. So it means that we that interest for the market. So there are more things at the upper side and the lower side. So it shows that market would try as much as possible to pack everything it can pack. This is an equal load to pack everything it can pack from this downside before heading up. So this is an equal low. See, there's a lot of equal lows here. Oh, so but it didn't go up below any of them. So we might see market even fall down a bit to like 86,000 before pushing up. So yeah, before pushing up to fill all those places and clear all these highs to this equal low. There is another block that created this one here on each one, clear all these higher highs too. So yeah, guys, thank you very much for joining the class, for joining the analysis. Sorry. Thank you very much. I'm very grateful that you were able to come out to you and this thing again. Ah, and